Oh, hi everyone, and welcome to this morning's Forex session. Thank you so much for taking the time to come and join us. And by us, I mean myself, Anna, and my husband David, who is sitting behind me at another bank of computers. And as you know, those of you who come along regularly, we will be looking at the Forex market, as I mentioned earlier. But before we look at what's going on, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And I genuinely would like to stress that I can't stress that disclaimer more strongly than I have. It is risky, so please don't put money that you cannot afford to lose at risk. Right, that's the disclaimer out of the way. Those of you who come along regularly or are have our quantum indicators or are on our program will know that we look at this market and all the markets through what we call the prism of volume price analysis, which is the price action, volume, support and resistance, candles, candle patterns, and time. And those 5 elements of volume price analysis have actually had a most beautiful expression in the pound Aussie that you can see here on my MT4 platform. Time, not just the time frame that you trade, but multiple time frames. And we also have a non-time based chart, by which I mean is the Renko chart. And as I said, I've been looking at the pound since this morning, and when I saw this, the price action that was developing across the multiple timeframes, I thought, oh, this is just, as I said, a beautiful expression of the methodology that David and I have been using for, oh my goodness, it's now over 20 years. Just in case some of you may not even be aware of the technology, of the methodology, not the technology, you can find all the books that we've produced up on Amazon. This is a complete guide to volume price analysis. As you can see, it's actually on special offer. This is a promo that Amazon themselves are running, and it's only $134, which is the ebook version. And as you can see, we've had over 1,600 reviews, ratings on the book. And what that means is we have very few 1-star, 2-star. It's predominantly 5-star reviews. You know, you're always going to get people who don't subscribe to this approach to to dissecting the market. And it's a free world. Those traders and investors that have embraced it, and it's embracing it into perhaps an existing approach, such as using Fibonacci or Elliott wave, or with other indicators, it really works even better. The analysis that they were doing with their, perhaps just with Fibonacci, for example, when you introduce the elements that the volume element that we talk about in a VPA, what does it do? It basically confirms whether the price action that you're seeing on your screen at the level that you are seeing, because obviously Fibonacci gives you these very important levels, whether it's genuine or not. And that's all we are trying to establish. And we've even got some really nice examples on the pound Aussie chart. Right, before we do look at that chart, as I said, I've got MT4. David he's got a smorgasbord, haven't you, David, of platforms over there. He's got all sorts of things on his system. His system is slightly more powerful than mine. So we'll be sort of going between the two of us. But before we do, as you know, this is a holiday shortened week. We've got Thanksgiving tomorrow. It's got this sort of 4-day holiday. And generally speaking, with markets, as a generality, they do like to end on a bit of a high. It's not, they're not keeping to the script at the moment. The Nasdaq sold off the Nasdaq, the NQ, which is the futures version of it, sold off, did come back. We did have a sort of wick to the bottom of yesterday's candle, as we can see here. So there was some buying coming later into the session, but that's, you know, I haven't really had a chance to have a look at the volume under that at the moment. Wicks to the candles are hugely important. The candles on their own, you know, tell a story. When it's supported by volume, that it gives you like a fuller picture, if you like. And there's a post on my site on the NQ based on this candle here, which had weakness at the top of the candle with a ton of volume underneath it, and that's what you want. And then we said there is weakness coming in now. Could have been profit taking, all sorts of reasons. The holiday coming up, you know, people closing out. It's, as you can see here, it had a really nice run up, the NQ. Yesterday, I said I haven't got the volume under this candle here. You'd have to see whether that was, you know, there was a big effort to come in to buy at, well, it looks like whatever levels. There'll be buy orders littered all the way down because traders and investors all have different view of the price action and what is going on. Then, as I said, the narrative leading up to the Thanksgiving holiday has always been one, and Christmas has always been one of optimism, apart from 2018, where we had a big sell-off. And we just have to watch the charts and play them accordingly. If they're going up, you buy, and if they're selling off, you sell. And how that is reflected is obviously in the currencies and the currency pairs. However, there are some really important items of fundamental news coming up today. Forex Factory is great, but I want to go over to trading economics because I just want you to see the sheer amount of news that is expected certainly this afternoon in the US. And what trading economics does, it really kind of breaks it down. And also the bold ones are the ones that are going to impact, you know, likely to impact the market. And I'm not going to go through all of them. You can judge this yourself. Certainly, we've got GDP, we've got preliminary GDP, you've got some employment data, you've got durable goods orders. What else have we got? And this one, in fact, is even more impact. They've actually put it in, they've highlighted it with red, and this is what's known as the PCE. Now, the PCE is what the Fed uses, is the index the Fed uses as an inflation metric. And if that weren't enough, we also have the FOMC minutes. So, you know, it's Thanksgiving tomorrow. I think everyone's going to need it just to recover from what is, you know, what is coming up. Certainly, by the time the US session starts, 1:30 for Forex and the Wall Street Open, which will be 2:30. So expect a lot of volatility, you know, judging just by the amount of news that is coming out. So please make sure you have that somewhere on your desktop just to follow it. Be aware of it. Trading economics is free. Nothing wrong with Forex Factory, but as you can see the difference in what they highlight, they do pick up the highlights. They've got the core PCE, they've also got the preliminary GDP and the FOMC, but there are all these other ones as well, which could have an equally a strong impact. And those of you who also come along regularly will know I have 3 calendars. The third one is my financial juice one. There is a free version of this one, but it is slightly delayed in this is very slightly, this is the live one. So, and what I don't know if I mentioned this before, I must admit I hadn't realized Amine, the guy behind Financial Juice, we've kind of been in contact for years now. He's got the refinement on it now, which I think is brilliant actually. So you can actually sort on, you either have the whole news, you've got crypto, as you can see here, you've got indices, you've got macro, and it's got this new one, which is the risk. And you know, I think it's great. He's done a really fantastic job with this calendar, and I can't, you know, we can't praise him enough for it. Right, okay, so that's a quick whiz round. Before I pass to David, as I said, the pound Aussie, which is having a bit of a reversal. Where to start with this one? Well, we said it was price action, first of all. Let's go through the 5 elements that make up VPA and in the multiple timeframes. If you use multiple timeframes, what it will allow you to do is, if you see something that is setting up in one time frame, it's really good to see then that confirmed in another time frame. It will play out in another time frame, but in a faster time frame, it also gives you an idea of where that particular move may or may not be heading. So let me give you an example. Let's start with the hourly chart. Right, this way. And the candle that really immediately catches the eye is this shooting star candle. Now, that of itself is a very strong price action signal where we've seen the price go up and then knocked back. Now, we have to bear in mind with Forex is the time, because this market is actually 3 separate sessions. And what we always want to see with strong candles, particularly with big wicks, either where we have a wick to the top, which is selling, or a wick to the bottom, which is buying, is we want to see, you know, lots of volume underneath it. And you look at the volume underneath that candle and say, well, that doesn't look terribly impressive. That is, then you look at the time and it's 6 o'clock, which is the sort of start of, you know, London's not on board. It's the tail end of Asia. Europe is just coming along. So you do have to look at the volume that is underneath a strong candle like that in context and make it relative to the session in question. And you know, there are traders who are not aware that in fact you are trading 3 very distinct sessions that are going, and the drivers for the price action in those 3 sessions will be global, but they will also be local. Now, this is the pound Aussie. Now, with pound, obviously at the London Open is going to have an impact, and with the Aussie, you know, it's also you know, the end of what's been going on in Asia. But from a purely price action perspective, seeing a candle like that in one time frame, which is the hourly chart, we know there is a weakness coming in. So that's that. So how does that reflect in the on say I only have these time frames for MT4 on a 15 minute chart. Well, these are all the candles that contributed to the run up that we see here. And you can check the time by just, you know, highlighting the candles and seeing what time it is and comparing it to what's going on in the hourly chart. And if you go and if you look at these 2 candles here, what do you have here? Well, you have a bearish engulfing candle. And if you overlay that candle over that candle, what do you get? That would be the wick. So it's gone up, then you get the bearish engulfing, and down it goes. So that's looking at candle patterns in 2 time frames. And I've just looked at the hourly chart and the 15-minute chart. And if, as I said, if you put your cursor at either the top and the bottom of these candles, it will tell you the kind of the time itself where it actually happened. It won't be exact, but it'll be in that ballpark. So if you saw that, on the hourly chart, you saw that coming in the shooting star, you would have seen possibly the price still going high, but as soon as the bearish engulfing came in, you could say, oh, well, that's, you know, one time frame is, if you like, confirming the other. We also, what we've done, we've also developed these very, very particular indicators for the Forex market that tracks the flows into the individual currencies and also into the currency pairs. And they also will signal potential reversals. We can see a reversal obviously when something is oversold or something is overbought. And my suggestion is you have both the you have the matching time frame, so you have the hour and you look at the hour, but you should also look at a faster time frame, because moves always start in a faster time frame. What is also interesting about this particular move is when we look at levels. This move, obviously, so we've looked at it from a price action perspective, you've looked at it from a volume perspective, and as I said, you do have to read it in the context, and you also have to remember that's all been pushed down because of the volume that's come in subsequently because of the London Open and what is going on now. But at the time, that the volume under these candles, would have at the time would have been significant. Then we look at support and resistance. We measure support and resistance. We have price-based support and resistance, and we have volume-based support and resistance. The volume-based support and resistance is based on the volume point of control, which is this yellow line here. The volume point of control is what we call the fulcrum. It's that zone on the chart where there has been price agreement. It's a bit like the concepts behind market profile. There's no clear direction, there's no clear bias, so you will find often price will attempt to break away. There'll be a congestion, there'll be range bound trading, and it's something that traders don't like, but I would say you've got to suck it up, because most markets stay in congestion a lot longer than they actually trend. So you've got to learn to either trade these type of market conditions, or you stay out and you only look for reversals, in which case you will probably not be trading as often. And reversals will then occur at significant turning points, and those turning points will also be confirmed by candle patterns. Now, when we looked at the hourly chart, all we saw there, well, it didn't seem to show anything very much. We had some volume resistance based on the volume point of control, which on the hourly chart sits in this region here. And you think, well, why did it suddenly reverse off out? Well, and this is because we have another indicator, which is a price-based indicator. We have two price-based indicators. One of them is based on the Camarilla, and it has 6 levels. And we also have what we call the dynamic support and resistance indicator here. And these are either solid lines, which tell us that it's a stronger region, or you have a hatch line. As you can see here, it's not quite so strong. What happened in this case is we had a strong candle on the hour. On the 15-minute, we saw this setup, but look here, it went straight into the R6. It was also at the furthest limit for the volume point of control volume support and resistance. In this case, it was resistance, and it also had a solid price-based dynamic solid line from the dynamic support and resistance. So you had 3. You had you had 2 price based, and you had a volume based. So that in itself would tell you that this trend higher, which was actually this break higher from the volume point of control and the R3, the likelihood was at the very least it was going to pause, because it had this confluence of support and resistance factors. With regard to an actual kind of entry point, I've actually got the 5-minute chart here, and this is what we have the repeat here. We can see here on the 5-minute chart, and the Camarilla levels are calculated on a daily basis for all time frames up to, but not including, the hour. On the hour up to the daily, they are calculated once a week. So whatever levels you see on the weekly chart, on the hourly chart and the daily chart, they're there for the week. On the weekly chart, they are there for the month. So you have 3 sets of values to help you determine where this price action is likely to stop or not. Then we come down to the Renko chart. A Renko chart is a chart that has no time. This is based on what we call these little bricks here. You can either set the value yourself, so each brick is displayed, is posted once a certain number of pips go through the market. I think I've got this at either 2.5 or 3 pips, or you can use the ATR version, and the system, the indicator just calculates it. It's based on average true range. I've just happened to use a fixed value here. And what we witness here, as you can see here, and what Renko picks up is when you do get a move, first of all, it smooths out any wicks, because there's no wicks on a Renko chart. And again, by looking at it together with the time chart, you saw the time chart, you saw that strong resistance, you can then decide whether you want to use this as a potential entry. This is a much more, I'm not going to use the word aggressive, because that presupposes there's going to be much more risk, because risk is relative. Risk is relative to what is going on in the charts. On the time chart, we saw we were coming up to the R6. There was strong volume resistance. There was a big shooting star, you know, that was forming on the hourly chart. You had a bearish engulfing on the 15. The Renko hadn't quite turned over. The more measured, if you like, entry would be once you get the trend dots. You get first of all, you get the red bricks, then you get the trend dots changing and also matching the trend monitor. As you can see here, if you waited for all of those, you would have missed this little bit here, and it all depends on your approach to risk, your risk appetite. Because what happens is when you're in a trade and you have, you know, your hard-earned money on the table, you are going to get stressed. Stress is inevitable. And what happens when we are stressed? The amygdala part of our brain kicks in. It's the fear, flight, or freeze part of the brain. And as part of the function of the amygdala to focus on our minds, because we have this threat, we become very tunnel visioned. So if you're focused on one chart and you're watching it, and because you are in this heightened emotional state, because it's been triggered by a fear of a loss, then what happens is it's really quite hard sometimes to look at multiple timeframes, to look at the elements of VPA, which will help confirm your analysis, and more importantly, once you're in a move and the move is developing and getting underway, is helping to keep you in. Now, the Renko is brilliant at that, because as you can see here, we did have quite, you know, a bit of a pullback. This is actually I think it's about the London Open, so you're always going to get a lot of jagged price action. Now, and whilst we did get a change of color in the trend monitor, it didn't go to bright blue, and then it it resumed. I think this is actually the London Open. And if you missed all this, the other function of the Camarilla is the importance of the third level. Often the third level is where you either get a reversal, or you certainly get a pause, then you get or you get a reversal, or once you've had this case here, you do get a resumption of the move lower. Now, what's been interesting has been this little attempt to rally by the pound Aussie. If we go to the hourly chart here, we can actually see the Aussie is still being bought. The pound looks as though it's kind of wanting to turn up a bit, but there may be enough buying of the Aussie to push this lower. Ideally, we want to see both these lines in a very sharp at very sharp angles, because we know there is an equal force driving the currencies. There's an equal force driving the Aussie higher and an equal force driving the Aussie the pound lower. And if we look at the 5-minute chart, we can see why, because, you know, yes, we had a little, this pullback that we saw the Aussie falling and the pound rising, but it looks as though possibly that is going to continue. Well, certainly the Renko is telling us, hey, it got down to almost the S3, it tried to rally, and now it's going to come back. So if you're already in this move, there's really no reason at the moment to bail. And if we look at the 5-minute chart, because for actual exits, I always say look at the 5-minute chart. And when we looked at that at the break low, the bit on the Renko where we saw that those pullbacks, it's here, it's in this part here. And what's interesting, this is at the, as I said, the R3. Look at the candles in congestion phases with the volumes. What do these candles tell you? Each candle, you've got effort to rise, pushback, effort to rise, pushback, effort to rise, pushback, effort to rise, pushback, with quite a lot of volume underneath it, which is what you would expect, because it's Hopper State and it's just on after the London Open. Plus we're at the R3, so we know we're at a level which is important from a support and resistance perspective. But this combination of candles with that amount of volume, the weakness that is coming in, this is going to give up the ghost. You just know it's going to give up the ghost. And it did, and it carried on. But nothing goes down in a straight line, which is why you want to see the Renko, because the Renko does at least, it absorbs all that noise that we saw in those candles around the R3 level. Now, with the 5-minute chart, it carried on lower. Then what happens? It comes down to the S1. The S1 isn't, I wouldn't say it's important, but I don't think it's as important as the R3. And again, we have some anomalous candles in the sense that you look at the spread of the candle, the shape of the candle, and what is going on underneath. And you look at this candle here, and you look at that amount of volume under there, and you think, well, if that's, if that was going to sell, that candle should have been down at the S3 by now. So what that's telling you is there is buying coming in. Whilst this is still bearish, why would you see so much, the buying coming in? Because you have to remember, littered, yes, along this, the price for a pound Aussie, there will be standing orders there, placed by the traders, placed by the banks, looking to either buy and sell at certain levels. But clearly, despite the amount of volume going into that candle, it certainly didn't push it any lower, and has also led to, as I said, this little push higher. We have the volume. The volume is then confirmed on the up candles, and then it kind of, not only the volume is then falling away on the last up candle, it then hits this resistance at the R2 and the primary trend lower, which has started since the break from the R6 is resumed. But when you look at the trend lower on the 5-minute chart, it's certainly not one that you probably wouldn't even recognize it as a trend, because there's the pause point here at the volume point of control, there's the pause point at the R3, and before the move lower is resumed. Now the next question is, it also stopped here because this is the outermost volume band from the volume point of control. So you would expect a pause. Now the S2, where's it heading to next? Remember I said about the third level? That is the logical next staging post for this particular piece of price action. But for it to carry on lower, we still need to see the volume maintained, because you need to maintain volume both in up moves and in down moves. And by moving, and that's short term, that's what's going to be happening fairly soon. And then we've got the fourth level, which is also important. Back to the hourly chart, which is off this candle, and you've already had this very lovely move lower. Where is this price going to? Well, your levels tell you here. This is if it gets to here, it's bounced off once. It didn't quite get there, but this is a kind of the range from based on the volume point of control. So if it carries on, then certainly the S3 on the hourly chart is a reasonable objective. But shorter term, on the faster time frames, it's got to get through certainly the S2, where it actually bounced off previously, and certainly, and then, you know, a logical target would be the S3. And if you see narrowing candles with lots of volume underneath it on down candles, it is not pushing lower, that is buying coming in. Is the buying going to be sufficient to reverse this trend that we have tracked since this, you know, this major move off the hourly chart, off the support and resistance, price-based support, price-based resistance, volume-based resistance? We just have to wait and see. But at least with the Renko, it does help to keep you in. What's interesting is we are seeing a change of color here for the second time. So you may posit, you think, well, do you know what? I'm actually going to come in. If you go down to, what's this one? This is the 5-minute chart. The Aussie is still rising. The pound looks as though it's flattening off. I mean, it could simply be that the buying of the Aussie has now rotated. If we put the Aussie up on the 5-minute chart, well, what's it rotated into? And this is where the matrix comes in, and also the heat map. Well, this is the pound Aussie. We want to see it going all the way down here. Is it going to carry up? That will keep us in the trade. But the buying is certainly, well, the Aussie yen is moving higher. Maybe, you know, looks like there's a stronger move there, because this market is about flows. It's about levels and flows, and levels of flows into the different pairs of that currency. Right. If you've got any questions, just pop them into the chat box. I hope that explains a VPA in broader perspective. As I said, it is all explained in the books. There is a Forex for Beginners book, which is particular to the Forex market. The indicators that are on the charts are, from those of you who know already, from quantumtrading.com. People often email and say, well, you've written the books and you talk about sport, you talk about VPA, you don't really use hardly any indicators in there, and now you do indicators. Isn't that a contradiction? And the answer is no, because the indicators evolved from the methodology. You start with the methodology. The methodology is so flexible. You can then add on what you think you need. Support and resistance is such a key part of volume price analysis, and there's lots of ways you can measure it. We decided that we would develop our own, and these are the result. These are the result, and I have to say, they have been much appreciated by, I don't know how many users we've got out there. David's got he keeps those sort of figures, and I think David says we've got several thousand. They either buy individual ones or they buy the full package. It's there's all sorts of different combinations. Some people just start with one, and if you ever start with one or two and then you ever want to upgrade to the full package, we will always credit you with what you have bought. And what I've gone through in terms of VPA, I mentioned the Forex program, that's in quantum trading education. That's, you say, well, I've got the book, why do I need the program? What the program does, the VPA, the technical analysis module in the program is VPA on steroids, isn't it, David? There are, I don't know how many, there are so many videos out there. It really, it's an advanced version, if you like. Does that mean that you can't use just the books? No, not at all, because the books, some people just use the books. We have people use the books with a few indicators, and then we have the program. The program also does a deep dive into fundamental, the related markets. This is for sentiment. Then we've got technical, and then we've got the mechanics of trading, which is basically, everything you need to actually trade, and most important of all, this psychology of trading. And I really do think, don't come to psychology of trading when you have suffered a loss. Psychology of trading, understanding not necessarily what your mindset is, although mindset is important. It's understanding what is triggered when you are trading, in the sense of what happens in your brain. and what you have to do to manage the emotions that trading can, you know, I said can trigger basically. With VPA, we believe if you understand volume price analysis, then it does take that sting away from the emotion, because you are looking at price action, you're looking at the volume, you've got your support and resistance, you kind of know in advance what is going to happen, and that's really what all you need to know. And once you have all the data that's on your chart, you can then decide how you play the information that is given to you. And with the indicators, we believe that helps make that to make that decision. It doesn't make the decision for you, it just helps you with the decision making itself, because ultimately this method, this approach is discretionary. It is not a system in the sense that, you know, you set up some very finite rules, you know, a sort of a mechanical system. It is still a system, but it is applied in a discretionary way. Is that okay, David? Can I pass it? Now I'm going to pass on to David. We'll see what happens with the pound Aussie. And even Aussie looks as though this is on the 5-minute chart, looks like it's running a bit out of puff. You also have to remember, from an Aussie perspective, it is a risk currency. So if the indices are not, you know, they're looking a bit sort of, you wouldn't really expect strong buying in the Aussie. You also have to bear in mind there's a lot of weird stuff going on in the markets at the moment. Just trade what you see on the charts, but just be aware of the relationships that these currencies and currency pairs have with other markets and other instruments.
Hopefully you can see my screen. Can't hear myself at the moment in my headsets, which is a bit annoying, but there we are. I'll just turn that up a little bit. There we go, that's better. Okay, hopefully you can hear me now, which is good. Yeah, I've answered the questions on the chat. Where to start? I tell you what, let me pull over. I've got euro dollar up here. Let me just pull over. Let's start with Trading View. There we go. Oh. I thought we'd done that. No? Well, I've got my screen up. Hold on a minute. Yeah, I've still got your screen. Hold on a minute. Sorry. You're not seeing my screen at the moment. Let's try that again. You should be seeing a white screen with chart and Trading View and what have you. Brilliant. Okay. Sorry about that. Just slide that out the way. There we go. Move down the chat box. Just for a change, I thought we'd start with, for those of you coming along regularly, you'll know this is it's a tiny little account that I've been trading pretty much for most of the year. We started off around $800. You can see that on here I've got 6 positions on here at the moment. We trade very, very, very tiny, single, micro lots, absolutely minute. And what we're trying to do is basically double this account in a year. Now, this is not about making money, but what it is about is finding an approach that works for you, is consistent, you're comfortable with it. This is obviously a much slower time frame. I've got the 5-minute chart up here, but actually these positions have been on since I think possibly Thursday last week. Where are we today? Wednesday. Yeah, possibly Thursday, maybe Friday. But they've certainly been on a few days. So in other words, I'm not really interested in what's going on, despite the fact I've got a 5-minute chart up there. I'm not really interested in what's going on in the 5-minute time frame. I'm much more interested in what's going on in the daily time frame, because these are just daily positions that are being rolled forward. You can see up here, this is our equity. We're getting towards $1,500, and my goal is to get this to 1,600 plus by the end of the year, in which case we've almost doubled the account, which is no mean feat. But that's not really the purpose. The purpose is to, and it's not about the money either. When you first start, making $700-800 in a year is not life-changing. But where it becomes life-changing is when you convert that back to pips, because that's 7,000 to 8,000 pips on this account. And if you multiply where we are at the moment, we've got $35 here, and we're trading 6 micro lots down here. If you multiply this by 10, then you'd be trading 6 mini lots, so that'd be $350. And if you multiply by 100, you'd be trading 6 full lots, which is $3,500. And $3,500 for a few days' work is very nice. Thank you very much. And that is life-changing. So it's all about the consistency. It's about finding an approach that works for you and you alone. It's not about what works for me or what works for Anna. It's what you are comfortable with. And in addition to that, it's also the time you have available. I don't have to look at this. I'm not sat in front of, I'm not glued to a screen. I'm not scalping here. Half the time this is closed down or it's over on another terminal somewhere. I'm not looking at it every 5 minutes. Now, the interesting thing about this right now is that, we've got $35 of profit in here. We've got 14 up on the day. The big question now is, and certainly it would be a big question if this were full lots or even multiple mini lots, is with the fundamental, there's 2 factors. First of all, we've got the big fundamental news coming up. So we've got quite a raft of key fundamental data coming up in the US fairly soon in the next few hours. But more importantly, over and above that, we've also got a holiday period, and you can pretty much be assured that even though it's one day, it's really going to extend much further than that. So it's kind of wind down today, tomorrow very quiet, Friday probably quiet as well because they take a 4-day holiday. So you then got 4 days, you've got Saturday, Sunday. So from now until Monday morning, the question you've got to ask yourself is, do I leave this position on? Do I close it ahead of that news, just bank my profit? Or do I leave it to run through that news, which may work in my favor, it may work against me, I don't know at this point. That is a decision only you can make. I will make that decision. Probably I will leave this on, but that's me. That's my risk attitude to this position. It tends to be the way I trade. It's not to say I'm cavalier, but I have a much higher tolerance for risk than you or someone else might have. Your decision may well be to close this out and take your profit off the table, sit tight, wait and see what happens. I can assure you, if the market goes in your favor, you will have trader regret and think, well, I wish I'd left it on. But that's hindsight. Everybody's got perfect hindsight, 20/20 vision when you're looking back. It's easy when you're looking back. But when you're looking forward, it's much more difficult. So you've got to understand, and it's one of the reasons that we I don't say insist, but we strongly urge our students to start with the psychology module. Fully accept it is quite dry. It's not as exciting as looking at live charts and indicators and all the rest of it, but it is a dry subject. There are 8 PDF downloads which explain everything in detail, and there's a full module on it as well. And the reason we always urge our students to do that is because you have to understand yourself in order to succeed in this business. And it's understanding yourself from a risk perspective, and also from trying to find an approach to the market that is going to you are going to be comfortable with, and find that consistency. Because when you go on the funded program, that's what you're looking for. You've got to be consistent, because the evaluation level, where you start at either 5, 10, or 15,000 of our money, not your money, our money, is you're looking for consistency, and we are looking for consistency from you. And it's finding that consistency, because once you've got that consistency, truly the world is your oyster, because it's just a question of leveraging up, of factoring up the amount of money you've got in the account. This is a tiny account, to say it's got nearly $1,500 in, absolutely minute, but it also proves the point that even if you've only got limited funds, if you trade sensibly, if you trade conservatively, if you trade very small size, and bear in mind your use margin and all the rest of it, you can even make money with these tiny little accounts. It's very, very doable. So nothing is impossible. And gradually, as your skills develop, you can put more money into the account and leverage up your risk and leverage up your profitability overall. So it's just a fascinating little exercise that we thought would be worth doing this year. We've just been running it along like that. This is just a dollar basket. So I'm looking, this is buying the dollar basically, Aussie dollar, euro dollar, pound dollar, New Zealand dollar, all sells, and the dollar CAD dollar Swiss are buys. So I'm basically buying the dollar per se. But this could be a euro basket. You could be buying or selling the euro. It could be an Aussie basket, buying or selling the Aussie. It could be a yen basket. It could be any particular basket you care to choose. But obviously they will have to be aligned in the same direction and on one currency. And of course, when you close the basket out, you close everything at the same time. It is the one golden rule, because your instinct, I can assure you, you will do this if you trade baskets. You will want to close out the profitable ones, leave the losers in place, and hope that the losers turn about and become profitable. Absolutely guarantee you will do that. I don't need to know who you are. Oh, one final thing before I move away from this, go back to Ninja. I think the person who asked this question is actually in the room. Yeah, okay, they are. It was about costs, commission costs when you're trading. If you're trading this sort of style there's two issues here. That if you're trading this sort of style much longer term, you're not really interested in spreads. I don't really care whether the broker offers me a 3 pip spread or a 2.5 pip spread or a 4 pip spread. I've really no interest in that. It makes absolutely no difference to me whatsoever, because the timeframes I'm trading over days here, what does it matter whether it's a 3 pip spread or, you know, I can maybe get 1 pip better somewhere else. I don't care about that. It's of no interest, no consequence. Secondly, when you're trading this style, the commission costs are much lower because I'm basically trading 6 positions. That's it. I'm 6 positions. I'm not in and out all day long. If you're trading scalping, if I was scalping, yes, I would be most certainly interested in the spreads. Secondly, I would be very picky about which particular pairs I traded. I certainly wouldn't be looking at trading some of the widespread pairs, some of the cross pairs, because the maths doesn't work. If you're going to scalp, you cannot go into a scalping position trading something that's going to hit you with a 5 or 6 pip spread. You'll never ever make money trading those pairs. So in terms of targeted trading, in terms of scalping, it's a fairly limited field of vision, because you cannot trade on those pairs which have wide spreads. Finally, if you are scalping, yes, your commission costs are going to be very much higher because you're in and out all day long. It's inevitable. So your costs are going to be much higher. So it's a quid pro quo. You know, as I come back to it, it's finding what works for you, what you're comfortable with, and also what time you have available. If you can sit in front of a screen like we do all day long, then fine, you can do whatever you wish. You can scalp or you can trade longer term, it doesn't matter. But if you have a full-time job, and we always urge people, don't go into this business thinking you can give up the day job and just make money. You won't, you'll fail. I absolutely guarantee it. You've got to learn the craft, and you've got to be patient, and you've got to learn the rules, and you've got to accept the fact that, you know, you can't just make money instantly and just give up another job. So keep the day job. If you're in the day job, you've got to find a way of learning and also trading at the same time. And generally a way around that is to move to slow timeframes like this, where you might check it a couple of times a day on your mobile or whatever, and then you can, you know, it's quietly ticking away in the background. So just wanted to show you that. Oh, right, we're there. Sorry, let me just pull this back again. Let's just see where we are on TradingView. This is the 4 indices. So top left, I've got a pound index. Top right, I've got yen index. Bottom left, I've got the dollar index. This is the one I want to see going up, obviously. And over on the right-hand side, the euro. Euro's been selling off quite strongly. Yen's been kind of flopping about, you know, neither one thing or the other. This is pound. That's been rising, generally speaking. And the dollar there, as I say, is moving along there. Very quickly, just to Randall, just to show you there we go. That's the matrix. I've got it anywhere else. Can't remember now. There we go. Just move that down out of the way. Sorry, not the matrix I'm talking about. This is the radar panel on TradingView. It's only available on TradingView. We are working on NinjaTrader, and we will be doing a similar sort of thing in terms of Market Analyzer, which is what we're working on right now. But this is the one we developed purely for TradingView. Have the indicators loaded up here. There are, I think, 3 different versions. There's a full version which has all the available indicators for the radar panel, and these are cut down versions. And this is the other indicator we developed recently, which is the cryptocurrency strength indicator, which is basically the crypto pairs against tether, which is the red line here. So this is basically the dollar. Tether is the dollar, more or less. And these are all the cryptocurrencies. We've got Ethereum, we've got Bitcoin, Litecoin, all down here, XRP. And the difference between this and the currency strength indicator, in terms of the market at any rate, is that the cryptocurrencies will tend to move en masse, as you see them here. This is on 5 minutes. So in a way, it's actually quite a comfortable market to trade, because there is no divergence, or very little divergence. The only divergence you get is obviously against the dollar, which is the key one. But these tend to move en masse. So if they're moving en masse, it's like the flow of the river. When we're trading in the spot Forex world, we want to be trading with the mass market. We want to be trading with the sentiment for that particular currency. So if we're buying a dollar, we want to see all the dollar majors moving in the same direction. But in the cryptocurrency world, that happens automatically. It's a de facto standard. It's very unusual to see one crypto moving against all the others. You might see it on a 1 minute, 2 minute, 3 minute time frame, just a sort of interim blip. But in terms of the way they move, that's what happens in crypto. That's an indicator we developed really very recently. That's only available on TradingView. We might get that available on the other platforms, but at the moment, so it's only on TradingView. This is on, I've also got TradeStation down here. So I've got NinjaTrader up there, and I've got TradeStation down here. And this is I've got the 28 pairs up here. So it just gives me a straight line view on what is going on. The euro here, you can see this is on the trend monitor. This is the trend dots, but you can see there's been a decent amount of selling on the euro, starting to recover a little bit. We pop down onto this 5 minute. Some nice examples of several things here. Anna mentioned the support and resistance, and on both TradingView and TradeStation and NinjaTrader as well, the way we developed it is with these levels here, which are on the accumulation distribution indicator. And the beauty of that is it actually creates these levels automatically and presents them as a visual picture of support and resistance by the thickening of the line. You might not be able to see it over here, but there's a little number here which says 11, and there's a little digit here which says 7. That means that this level was tested 11 times at some point in the past, and is therefore a very, very strong level of from above support and from below resistance. This one is equally strong, but it's only 7, so it's slightly less strong than this one below, but certainly a strong level of resistance. And you'll often find that we've got the VPOC in the middle here, the yellow dash line. These levels will build around that particular channel purely because the price action is rotating and oscillating in a relatively narrow range. And so these things are building constantly all the time. We then get the breakaway, we get a volatility trigger, market tries to come back and react against it, can't break through these levels. We've got this huge barrier now. We've got this level, and the VPOC in terms of the volume concentrated in this very, very small area here. And then we break away, we've got another volatility trigger. What are we expecting? Well, either congestion or reversal. We get, well, both. We get the congestion into the price and a reversal against it. Then we go into the nice price waterfall, lots of volume coming in, another volatility trigger, back into more congestion, and we're congesting around that one at the moment as I speak. I've said this so many times, when you're in a position, if you're scalping intraday and you get a volatility trigger and it works in your favor, close out, because you don't want to sit through congestion and you don't want to sit through a reversal. Is this going to carry on to the downside? It's pretty weak at the moment, but do you actually want to sit through all this? So, if you're in this position short, I'm in it longer term, but if you're in this position short intraday, close out, take profit off the table, sit and wait. If it carries on lower, fine. What have you lost? Nothing at all. Absolutely nothing at all. And the reason we developed the radar panel was really very much based off this idea of radar screen on TradeStation, because it's just so powerful. It's so quick flicking around through the charts. This is Euro Aussie. You've got 1, 3, 5, and 10 minute here. You can literally scan through here. You can see what's going on, the indicators, and also down the right here, I've got the volatility indicator. So you can see instantly when you get a volatility trigger in, it pops up here straight away. The most recent one we've got is actually Euro dollar on 5 was actually that chart. That's the most recent one. But it just gives you a very, very quick way, very intuitive, very quick, fast way of scanning through the charts quickly, picking out the opportunities, getting a sense of what is going on. So that's on radar screen. This is on NinjaTrader, back on NinjaTrader. Just have a quick look at what's going on in terms of the currency strengths on multiples. Let's load that up. Let's get that out of the way. There we go. Move that over there. Let's line that up. There we go. Okay. That's just loading up. There we go. There we go. So what do we got at the moment? This is on 1 minute. This is on 3 minutes. This is on 5 minutes. This is on 10 minutes. Well, the dollar's still rising. It's on 3, it's rising. On 5, it's rising, and on 10, it's still rising. It's a little bit fractured. It's not smooth. It's not a straight rise to the top. But then you don't always get, you're not going to see a comfortable rise to the top and a comfortable rise to the bottom. Make it nice and easy for you. And all you're looking at is what is going on. Okay, we've got the dollar here on 1 minute. It's right up at the top, so it's overbought. We've got some strong buying coming into New Zealand. So in terms of an intraday scalp, and this is right down to the other end of the spectrum, on an intraday scalp, the New Zealand dollar is possibly something that the scalpers might look at right now, because this was heavily oversold and this is overbought. But bear in mind what I said before, pick your currency pairs you choose as a scalper with care. You have to, because you cannot afford to carry a 3 or 4 pip weight when you're going into such a trade. It's like running a 100 meter race and you're starting 10 meters behind everybody else. You're carrying too much baggage. There's too much weight there. If you're going to be trading regularly, then you're really looking at, not only limiting the pairs you trade, but also looking at trying to get into something like raw spreads, where you really are tightening up the spreads to next to nothing to get in there. We've got the CAD up here at the top in terms of 10 minute. We've got the euro down at the bottom. So maybe the euro is starting to find some bullish momentum here. You can see it's rising on 3. It's been up on 1 as well. It's got a nice way here to go on 5, and it's just starting to turn up on 10. So perhaps the euro, might be looking for a bit of buying right now. What are you going to match it against? Well, you could be looking at the CAD up here, this purple line, so possibly Euro CAD, maybe Euro Aussie. Aussie is very overbought up here as well. Possibly even a move against the dollar if the dollar starts to roll over as well. Sorry? No, that's a spot on there. But I have got. Where are we? On TradeStation, no, they don't. You cannot trade. That's true. You cannot trade Forex through TradeStation. You can certainly trade futures, but you can do analysis on it. And this is the spot market. If I was to trade this, I couldn't trade. I've got a live account here with a tiny account, but I couldn't trade spot through here. But I could quite happily trade the currency futures through here. No problem at all. Not sure what I've got on futures. Not sure I've got the currencies here or not. Let's have a look. Yeah, I have got. There we go. I've got. These are the. Sorry, let's just go yen. There we go. Got those on there. So yeah, I have got the futures on here as well. But yeah, TradeStation, they sold off their business several years ago. So they don't do spot, that's absolutely true, but they do, you can trade currency futures. And the indicators, the currency strength indicator, the currency matrix, all the rest of it, they all work in exactly the same way. I've got them here on another workspace. There we go. They work in exactly the same way, and they'll apply equally to futures as they do to the spot market. Just going to have a quick look at the currency matrix. I've got the currency majors table there as well. See what we're seeing. Euro down here, as you would expect. It's been pretty heavily sold, so this is on 15 minutes. And now what we're looking at, we look at it in exactly the same way. Potentially, is this euro going to start to see some buying, see some love coming to it, and you will start to see these lift off from what was a very heavily oversold position, where all of these would have been at the bottom. The Euro Swiss is starting to rise. You're starting to see some separation coming into this now as they start to develop. And as always, when you're looking at timeframes, this is 1, 5, 10, and 15. These changes in trend always start at your fastest and move through to your slowest. And it's the same with the indicators. You'll start to see changes happen over here on the 1 minute. They will roll to the 5, out to the 10 and the 15, if it is a true change in trend. That's what you're looking for the whole time. You're obviously applying VPA, you've got all your indicators, etc., etc., etc. But you're always looking at the, where are we? There we go, let's go back to that one. you're always looking at your slowest time frame. I've got the 15-second here. It's a chart I use a huge amount. What you're looking for is you'll see changes in the trend monitor. You'll see volume coming in. You'll see all sorts of things coming in your fastest time frame. But if this is going to be a true change in trend, if that were going to be a true change from bullish to bearish, then you would see it rotate through, first of all, into the 2-minute, then across into the 3-minute, down onto the 5-minute, over onto the 15, and ultimately through to the daily. And from my perspective on that little basket over there, all I'm looking at is really this position here. I'm looking at the daily chart. It's still very bearish. And obviously I'll be going to look at the weekly now because I'm getting down to the extreme on the VPOC. So I want to get a sense of what have I got ahead? You know, where are we going in the next few days? Am I going to close this out today? Am I going to let it run? Blah, blah, blah. And you saw the weakness yesterday. You know, this was a little candle here. We had a little bit of an uptick, but decent volume under there. You know, it's hardly looking particularly strong from holding that for a longer term perspective. You saw a little bit of a transition here on the trend monitor with this little rally. The trend monitor looks at the market and goes, you know, is this a true change in trend, or is this just, we're not sure about this. The trend dots have changed. They always change quickly because they're close to price action. Then they roll back to gray, and now we're back into red again. But the trend monitor, yes, it did start to transition, but it never really fully developed. It certainly didn't get through into blue. It's just holding. It's not absolutely confirmation of a bullish trend change. And it now, if this carries on, and the same picture here, we went from bright red, we've gone into a darker red. Looks as though we're coming out to a bright red the other side again to convert back into a pickup of the original bearish trend, which is now developing. And if we step down onto the 15-minute and really look at the volume here, what have we got here? Yeah, we had a little bit of buying coming in here, no problem. Heavy selling on that one, some buying coming in here. The market tries to rally, but the volume falls away. And then we get this weak candle here with a little pivot to the top. You know, it's hardly looking strong. We're getting another of these efforts, if you like. So we've got volatility, volume comes in. Yeah, we try and rally, goes up here, looking weak, pivot to the upside, down we go. Lots of nice confirming volume. The market is still bearish on euro at the moment. And in terms of where we are on our little basket, let's have a quick refresh on that. We are still at, where are we? Let's have a look. Sorry, I'll just pull this over in a minute. Just loading up. Let's pull that back over again. Oops, all right. There we are, just pull that back over there. There we go, I've just refreshed that. So, you know, we're 38 now, 39, maybe down to 40, whatever. That's the Aussie. What's the Aussie doing? That's looking okay. Cable, that's come off as well. New Zealand, there was a rate decision over here overnight, which helped me. That's the dollar CAD, that's rising nicely, and the dollar Swiss, that's going up as well. So, you know, it's all lined up. Very nice, thank you very much. Hopefully we can get that through to $1,500 by maybe before the news even, we'll see. So there we are, we're gonna have to run. Let me just point you in the various bits and pieces. Anna's already highlighted the indicators there, quantumtrading.com, where you'll find them all. We are working on NinjaTrader 7.8 for the next few months and are currently working on that. As I say, bringing Market Analyzer, really bringing the indicators across into Market Analyzer. If you've got the full package, then of course you'll get those in full, in the fullness of time, which is what we always do. If you invest with us with a full package, it's our way of saying thank you. You get all future indicators, developments thereof, free of charge. You don't pay anything else. And that's also true of any other indicator. Once you bought an indicator, that's it. You get 24/7 support and full upgrades and enhancements as they come along, as our development team get to them. This is the Forex program, and I highlighted it. This is the funded program which we bolted in, and we bolted it in for one reason and one reason only, to give our students the opportunity to leverage that knowledge with no risk to them. It's our money. You're not trading your money, you're trading our money. You start at $5,000, $10,000 or $15,000. There is an entry fee down here. That's it. That's the only cost of entry. That's it. You can't lose any money on the account. Yes, of course, there are risk and money management rules, but this is the evaluation account. That's where you find your consistency, and we are also viewing you as a consistent trader, because once you go past that level that we set as a profit target on those accounts, we then gear up and we multiply them by 4. So if you start on 15,000, you go to 60,000 of our money, and you start to trade other markets. Down here on evaluation, only the 28 spot pairs. Up here, we give you access to indices and also gold. And thereafter, we double it. So if you go to 60,000, we then double it to 120, 240, 480, right the way through to 2 million. You earn as you go along. On the evaluation, you get a 35% kickback in one lump of the profit. On the portfolio managers levels, once you get up here, you can draw off your profits monthly as and when you choose, and that works at 50% of your profit is kicked back to you. And on the $1 million and $2 million accounts, it is 60%, and it becomes hugely significant, I can assure you. It's a very, very nice, healthy income. And again, you're only trading our money. It's as simple as that. It's called the Complete Forex Trading Program because that's what it is. There are 450 plus lessons. There are 250, 300 hours of videos in there, and it covers everything you need to know to understand how to, what tactical approaches are you going to take to the market, the mechanics of trading, the psychology of trading, which I mentioned before, VPA. There's all sorts of stuff in here, webinar library, topic webinars, pulling it all together, how to use the indicators, etc., etc. It's all in here. Finally, you'll find Anna at annacooling.com, all the books up there, and the links to all the various charts as well. So thanks very much indeed for coming along today. If I've missed any of the questions, you can get hold of Anna at annacooling.com. You can get hold of me, David, at quantumtrading.com as well. Always happy to answer questions on email, and if not, we'll come and answer them here in the next webinar. So enjoy the rest of the trading day. For those of you who are in the US, have a great Thanksgiving Day tomorrow. Enjoy the rest of the holiday. A little bit quiet maybe for the next couple of days, I'm sure. But we will be back next week. So enjoy the rest of the trading week. Have a great weekend, and we will see you soon. And bye for now.